everyone. Welcome back to the Options Professor podcast. Today is Friday, April 23rd, and I'm going to go through a recap of my week. Actually, what I want to do this week is do a recap of my watch list that I had published Sunday night. And I called out 5 trades or 5 stocks that were bullish and 2 stocks or stocks tickers that I was looking at to be bearish. And they all actually look pretty good. So let's go through them one by one and talk about how they played out off of the watch list that I published Sunday night. All right, so the first stock, and here on the right-hand side of my screen here, I've got the actual watch list and the stocks that I had called out with their levels. So if we take a look at Accenture, I clearly said that support at 285. And if we look at 285 at this level here, where it ended up Monday it traded down a little bit, down to really 285. 285 was the level it hit, and then just started to trend upwards. All right, so my range here of 285 or of support was really a good level if you want to sell premium or sell credit there. And then look here, I said range to 290. It did run all the way up to 293. So 290 was a good level for it to run up to, even past that. All right. So ACN I didn't, to be honest with you, I did not take this trade. I was too busy watching other stuff. I kind of forgot about ACN. But this would have been a nice credit spread at the 285 level, potentially closing it out as early as Thursday for a nice sizable profit. All right. The second stock on my list, as we can see here, is Autodesk. We'll just get this back. So Autodesk, if we take a look at what I said inside of the watch list, 295 was support. And Monday, it took a big drop. And so I'm not sure if I would have necessarily entered into this. But if we look at where we ended up, and you know, I was watching the 50 moving average. This thing did come back up above and closed at 295.22. So it did hold 295 for the week. Not exactly pretty, but it got there. And honestly, I don't know if this would necessarily have stopped me out or not. And some people probably would have. So not ideal, but it did get back to the level that we'd called out at 295. All right, that's Autodesk. The third one was CrowdStrike at 210. CrowdStrike 210 with the range to 225. Range to 225, support at 210. All right, Monday we opened up, had a big spike up and then back down. But if you look at the 210 level, that was a major line of support. Even though it dipped below it on Wednesday, it still recovered and even went for that high of 224.99. So pretty much that 225 I'd called out as the target on the top side with support at 210. Okay, so we did see exactly what I'd predicted. If I thought this was going to hold 210 and then be able to run all the way to 225. All of those things happened both into Thursday and Friday. So this would have been another profitable trade by either selling a credit spread down here at the 210 level or taking a debit spread all the way up to 225 that expired today. Both of those types of strategies would have worked out for us this week. Expedia, like I said, I've been playing this one week over week, probably the past 2 or 3 weeks in a row. And I said 272.50, which was my level prior. I was last week I'd sold the 172.50. The 167.50 is where this green line is, and I had sold this level in previous weeks. So if we take a look at what happened Monday, it took a dump down Tuesday. There was some news in with airlines, and now closed out the week all the way up to at 177. Okay, so I said 178 was my range 2. It actually exceeded that, went to 180, a high of, closed at 177.63, just about 178. And so this 172.50 level would have been fine. The 167.50 down here was even safer. So depending on timing of entry, We could have sold 167.50 again on Tuesday and then just taken the credit at 167.50. All right, so another stock that actually played out the way that I thought it would. And then the last bullish one I'd call that was McKesson, MCK. And let me just see, we looked at 190 being support with a range to 198. So here's Monday. Monday it opened up around, it did open up higher than it closed Friday at 194. It came back down to about 192. And you can see the 190 was always pretty safe, a pretty safe level. And it just trended up, hit a high of 197, which is right here. And as you can see in my watch list Sunday, talked about being 190 being support with range up to 198. So pretty close in being able to see that momentum of the movement with the support level of 190. Again, a couple of different trade strategies that could have been taken here. Either sell the 190 level for a credit or get into a debit spread that would take us up to 198, 197. Probably would have been pretty profitable coming into Friday. All right, let's take a look at the two stocks that were bearish. And I remember saying probably won't have a whole lot of supporters on the GameStop one, but let's take a look at what it did. And I specifically said 170 was resistance. Friday, we only had this amount of news Friday, so it had closed around 155 Friday, and I said 170 probably is the level of resistance. And you can see here's 170. It opened up above 170, but then came right back down. All right. So had I sold the 170 level on open Monday, this would have been a great profit opportunity to take credit by selling call credit spreads here. And as we can see, we closed today at 151.21. So right back to the 150 level, hit that resistance of 170. So going into next week, 170 also could still be a level of support, resistance going into next week, as this 200 moving average is just trending downwards. All right. And the last one was Rocket. Let's see how Rocket did. And this one's been pretty stable. It's been sitting right under this 23. And if we look at my watch list here, we said resistance at 23, and that's pretty much all I said. So we come back to the chart. The resistance at 23 was because of this 200 moving average, and it's trending down. It's right below 23. And as you can see, for the entire week, here's Monday, it did not go over this level. Okay. So probably not a good trade to get into because we probably didn't get close enough to 23 to get enough credit, but at least the level had held, and we can watch this for future weeks to see if it holds 23 next week and potentially get some credit at that level. All right. So those were the 7 stocks on my watch list from last Sunday. If any of one of them probably would have been good plays. Nothing really broke trend or broke support that would have been worrying. And to be quite honest, I didn't have time to get into any of those trades in my portfolio this week. I had a very light week, sticking to maybe a couple day trades in Apple, and then some credit spreads on Netflix as it came out of earnings, and made some money there as well. All right, so that was my week. Overall, not a bad week. I will publish another watch list Sunday evening, which hopefully goes 7 for 7, just like this past week. Now, if you are interested in seeing that watch list and want to get it as soon as I publish it, hit that like and subscribe button, and we will see you next week. Have a great weekend.